I started real estate with only $500 and now I have 8 properties in the course of 2 years. So what I want to do is talk to you about exactly how I got started, because a lot of you already know there's a lot of cash reserve requirements that you need in order to qualify for loans and such. So I want to tell you my situation. Maybe it applies to you and maybe you can utilize some of the tricks that I utilized to get around the fact that I didn't have any money when I first started. So let's get into it. So just a little bit about me. I had $500 in the bank. I was a person who lived paycheck to paycheck, blowing their money all the time. I enjoyed living the high life. I actually had a luxury apartment that I was paying about $2,300 a month for basically a 1-bedroom, and I was doing that for a while. This is actually in the DC area. So I was a person who did not really care about finances, didn't care about savings. So I had no 401k, no savings really of any sort. And I think I had a little bit of a wake-up call when I had to ask my parents for $500 just to make a rent payment. And my parents are not the type to give me any money at all, so that was a very uncomfortable thing for them to do for me. Now, one thing I did have in my advantage, which I'll have to admit, is at the time when I first started real estate, I was making about $80,000 a year at a job working for IT. Now, at this current time, I make more than that, but starting out, that's all I made. So, which still, when I say it like that, all I made, I mean, that's still more than a lot of Americans are making. So I will understand if you are making less than $80,000, I still think a lot of these strategies are possible. You just simply won't be able to get quite the expensive houses that I was able to get, or maybe you might have to slow down just a little bit. But all of these tricks are still repeatable, still possible for anybody. So the first house that I got was a $400,000 property that I used as a rooming house. I used a technique called house hacking, which I define as buying a investment property with a primary residency loan. Why would I do that? Well, the reason you use a primary residency loan, you want to live in the house, is because you get lower interest rates, you actually have a lower down payment, and you have access to a lot of easier financing options. Everything is much smoother for you. So this means that I wouldn't really need any cash. Now, admittedly, in this case, I have access to a loan that many of you don't have access to, okay? So I had a VA loan. That's because I served time in the military, completed my contract, and therefore I got to buy a house for zero money down. I understand that a lot of you may not qualify for this sort of thing, but keep in mind there are other loans like that. If you don't have access to this loan, then I could have used a 3.5% down FHA loan in order to buy the same property. I just then couldn't have started with $500, so that obviously wouldn't have worked then. But that is an advantage that I had. I will have to admit, yes, I got a 0% down loan. So as many of you know though, however, you still need cash reserves in the bank. When you purchase a property, you need to have at least, usually 3 months for the subject property that you're actually buying. In this case, it's just 2 because it's a primary residence. They will be a little easier on the requirements. And when you're buying investment properties, you need 6 months cash reserves, which we're gonna get into later. So how the heck did I qualify for that? Well, that's because I had a friend who let me put my name on her bank account. So it allowed me to basically have more money than I actually had, and I could do that. Now, there are a couple other tricks that you can use, okay? So my parents were not the type to give me any money, as I mentioned. Well, if your parents are the type to give you money, keep in mind that you are allowed to receive up to $15,000 as a gift for the purchase of your first property. Now, if you don't have parents who, like mine, don't want to give you any money, but you do have a friend who is willing to give you money, then all you have to do is have them deposit the money in your bank account at least 2 months before you're going to purchase it. That way you don't have to explain where the funds came from. So it'll take a little bit of pre-planning on your part. Now, keep in mind, all these strategies are very dangerous if you don't have at least what I had, which was a good paying job. If you don't have a steady source of income coming in, then doing all these tricks is super dangerous because then you actually are at a point where you can't afford the house. Now, also keep in mind, I was house hacking the house, which means I was renting every other bedroom in the house. I already knew I was going to be living for free. I was not going to be paying anything. In fact, I got paid to live in the house. So if your situation is not like that, you shouldn't pull these tricks if you plan on paying that mortgage. Okay, this is strictly for you investors out there who want to start just like me. So just keep that in mind. But if you're not the type who can actually move out of your house and move into another house and start living it up with other people or do an Airbnb or with all the other different strategies I talk about on my channel, well, then you're going to want to listen to house number 2 because that's when I had some other creative financing solutions. But this time it was an investment property, which means I couldn't use a primary residency loan. Now for my second property, I actually had a friend give me the money 2 months in advance. I used that trick that I just mentioned earlier. So she was willing to do that. I spent 6 months talking to her about this strategy, how the burst strategy works, how I was going to do it. I showed her all my finances and all my documentation, and I knew how this process worked. And she started to feel comfortable after 6 months of me explaining it. Took a lot longer because, well, I didn't really know what I was doing as much, so I totally get it. I also had harsher terms. I said I would pay down the principal every single month, so obviously it wouldn't be just interest only in this case. So luckily, though, I had that good paying job, plus I wasn't actually paying for where I lived. So I was saving a lot more money using this house hacking technique I described earlier. So essentially, in this case, I used a conventional loan, okay? This property was about $80,000. Now, keep in mind, properties this cheap are very, very difficult to get financing on. Luckily, I had someone who was willing to do it, and they had to assess more points and fees that I had to pay, but I had to use the conventional loan, which means I only had to pay 25% down. Well, my $10,000 that she gave me, plus a little bit of money of my own, was easily able to cover it. And then also, I had another $20,000 loan for the renovations. That's another friend who gave me that. Once again, we amortized the loan. It cost 18 months, and I had to float those payments over time. So it was actually pretty much a lot of a struggle where I was making payments to all these different things in the beginning of this whole process. So once again, I mean, for those of you who maybe make less than I made at the time, I totally understand. Just buy a cheaper house and you can do all the same things. It's not a big deal like this $80,000 one that I just mentioned to you. So let's talk about the third house that I got. This one I actually paid for all cash. It was $22,000. Now this is a renovation that I explain in a lot of detail, where I have this series where I say 2 gut renovations that I was doing. And this one I was doing with my partner, Austin Carroll. Now, in this case, I actually got the loan from my parents, and we basically financed the entire renovation over the course of many months, and got different loans from different private lenders to do everything. So I still wasn't comfortable with hard money lenders, which I'm going to talk about later. I still wasn't comfortable with using the JV strategy, which if you don't know what that is, I'm going to talk about that later because I'm now using it. But at this point, I was just still using private money lenders to float these loans, and this time I had Austin's help, one of my mentors who basically got a lot of the financing put together for this, and I did a lot of the grunt work. So this is one way you can partner. If you have a lot of free time and someone else has all the money that you can work with, you can partner by you managing the deal. Okay, remember, I didn't have as much experience. I'd only done one renovation project because my first one wasn't a renovation. It was a house hack. I just moved into a ready house. And so essentially, with that kind of dynamic, Austin would tell me what I needed to do, and then I would make sure it got all done. And I would spend a lot of my time going to a renovation project, making sure everything got done. It's a little bit harder that way because I didn't know what I was doing, but if you are determined enough and you are willing to put in the work, then you might find an advanced investor is willing to take a chance on you and let you do most of the legwork while they just simply instruct you on what to do. Now let's talk about the fourth house, and we're going to go into all 8 here. So the fourth one, I used the BRRRR strategy on that second house that I had talked about, and it got all my money back. Now keep in mind, I'd already paid off my loans because I was paying them off, amortized, and I was essentially paying down the principal every time. So when I got the BRRRR money back, it all just went directly to me. So at that point, I could buy my fourth house, which was another house hack. I used a 3.5% loan. It was a conventional loan at the time. You could do that. It was a 3% down, conventional loan. And I moved into that house and then rented out my one half of the house, and the other half I lived in completely alone. So essentially no more room sharing. And that house is still the one that I live in today, and I managed to make that work. And that is how I bought the fourth one. This pretty much brings my finances pretty much back to near bottom. And so I wasn't saving a whole heck of a lot of money. That came later in the pandemic when I started saving up lots of money. And I'll explain how I did that based on the way that I purchased these next properties. All right, so house number 5, I used the almighty hard money loan. And so essentially what I went and did was we went on a site called hardmoneychoices.com. It's actually a local site to the Baltimore area, but honestly, hard money lenders are easy to find. they want to find you. So if you wonder where they are, they're everywhere. As far as, their terms and all that, they'll change. And I mean, in this case, we had to pay $1,000 for origination fee. This was basically to pay for the lawyer. And then we had a loan for 12% interest, which we only had to pay the interest payments over time. So we bought a house for $55,000 and renovated that whole thing using just the hard money loan, and all the money from that got us through that entire project. So this is one that you probably hear about most often because a lot of people talk about not being able to find the private lenders that I managed to find. And keep in mind, I found them from all over the place, all right? I talk about that all in another video. But if you can't find them, then hard money lenders are probably going to be where you're going to get a lot of your traction from. Now, having not needed to buy or spend any money on the last house, I was able to start saving money through not only, saving money from my job, but also from the fact that I wasn't living in the house. I wasn't paying for the house that I was actually living in, and I was still receiving rent checks from all these other houses. So it started to stack up quite quickly, all right? And this is right around when the pandemic hit. And what happened was interest rates dropped to record lows. So I started refinancing all of my houses. And when you do that and you refinance your houses, you skip monthly payments, all right? So let's say you refinance in May. Well, you don't have to pay again until, let's say, August or July. I mean, it just depends. Sometimes it's usually just a month, but oftentimes, depending on the timing, you can make it 2 months later. Well, a lot of you might say, well, they just wrap the payment into the loan. And that's true. But remember, I'm not paying for the loan. The tenants are, which means for me, this is all free. I basically got to collect all of the rent, but yet didn't have to pay any of the mortgage payments. This was a huge boost to me. And I did this on all my properties throughout the pandemic. So that's how I got a lot of money in there. So if you like that little bit of a nugget on how to get, more money, then I've got a few more tricks for you throughout this video. Now, the next way I bought my sixth property is probably the most unusual way, and that's I met somebody basically online, just kind of meeting them and talk to them, and I decided, you know what, this person has the cash to buy the properties but doesn't have the knowledge. And at this point, this is my sixth property, so I decided to do a JV. That's a joint venture. That means she provided all the cash and I provided all the work and the knowledge, and then that meant I didn't have to pay for another property. And going through this, I taught her how to do real estate investing. That's what she wanted to learn, and I was essentially just working through the house, and she funded literally everything. Bought the entire house, $105,000, and I talk about it in one of my videos. The entire renovation, she funded the entire thing, and I was good to go. So once again, not spending any money on my project, still saving and getting to churn my interest payments through my job, which essentially is becoming my new rent, I guess you could say. Now, the seventh house, I actually used that same hard money lender that I talked about before, and he purchased the entire property, $185,000, put that on a hard money loan, and then we got the other $140,000 through a partner's lender. So I started partnering with people who could find other lenders in the area. So now, a lot of times, I don't even have to look for lenders anymore. They just kind of start to show up at this point. And so I even found a few lenders who help pay for this project through my lending program that I have here on the channel. If you want me to mentor you, then I do only mentor my lenders. I'd rather pay you to mentor you. So if that's something you're interested in, let me know, and my email is in the description below in this video. But essentially, once again, didn't have to pay for anything, and I'm showing my mentors exactly how I'm renovating this house, exactly what I want to do, and all of it's going forward just as planned. Perfect. Once again, get to save my money and get to reinvest it. And this is where I started to get into stocks and such, which I mentioned in the last video. Now, on the eighth property, we had to use a new trick. So we wanted to buy the house all cash, but I didn't physically have the cash. And even if I did, I probably wouldn't have wanted to spend it. But to make an all cash offer, not hard money, okay, no lender involved, I want to make all cash. That meant what I had to do was I bought the property in my name, but then used someone else's income statements to actually qualify for the house. I used their bank accounts and everything to qualify as far as showing the proof of funds. How did I do that? Well, I just explained that we were buying the house together and using my name on the house as, the financing to get better financing terms. Remember earlier I mentioned how primary residency loans can give you better financing? Well, so is putting it in your own name rather than an LLC. But you can't put it in both of our names. So this was understandable to the realtor, and they allowed me to use her proof of funds, her bank account in order for me to say I was going to buy it all cash. So I'm going to buy the house all cash, and then she's going to give that to me, and then I'm immediately going to pay her back by getting a hard money lender to lend on it. So this gets around the problem of needing to say, oh, I need a hard money lender to pay for this. I had someone else who can just front the money and I pay them back. Not even a big deal. Put a lien on it, boom, they'll be paid back in minutes. So that is a little trick. If you ever want to do all cash payments and you do have a friend who has the cash but you don't, well, then you can just simply say, hey, look, I'll pay you back immediately. I just need you to buy it real quick so I can get the best offer on the deal. Remember, all cash payments, no lender required, is the best cash offer possible, which means you'll pretty much win in almost any bidding war. So if you like those tips and tricks that I just showed you in this video that no other channel is even talking about, then let me know in the comment section below which one do you think you'll be able to use, and maybe any concerns you might have using them. Just remember to actually be able to afford any of these tricks that you're trying to use, because it would be really bad if you just totally botched this and then, had a house you couldn't pay for. But anyway, let me know in the comment sections if you have any questions, and I'll talk to you all very soon.